Elon Musk telling UK Prime Minister Rishi Sunak that he expects AI to eventually wipe out all jobs, calling it the most disruptive force in history. Musk adding that AI cannot be controlled, but leaders may be able to guide it in the right direction.
Here we are for the first time, really, in human history, with something that's going to be far more intelligent than us.
The singularity is supposedly when machines, their knowledge is 1 billion times what all human knowledge combined, and they have 1 billion times the knowledge of that. And think about it. We can't even, that's why we can't even imagine what it means. Yeah.
No, we've watched it play out in science fiction, in novels.
There's novels where it's all between thinking machines. There aren't even any humans anywhere.
And it's here.
So, Jay, here's the question. We were talking about this in the last hour. At this point, there is still the potential to bring a second case against Sam Bankman-Fried as it relates to campaign finance reform and how he had been moving some of that money around. That decision doesn't have to come from the prosecutors until February, the judge said yesterday. The question I'd ask you, as a former public servant and somebody who lives in this world, if you are a prosecutor, do you say to yourself, you know what, enough's enough, we've done the work, he's going to prison for the rest of his life, and it's not worth the tax dollars to keep going? Or do you say that there's a point that needs to be made from either a deterrence perspective or something else in terms of wanting to expose and put on record what took place? Do you decide to prosecute that case or not?
Well, Andrew, as a citizen, I'm in the latter camp. I think that Damian Williams appropriately characterized this as one of the largest financial frauds in history. As I see it, this is one of the largest campaign finance problems in history, and it's high profile. And as a citizen, I would like to see this case pursued. Now, how it gets pursued, whether there's some kind of plea agreement, but the facts of what happened here ought to be on the table, because Sam was not the only one participating in this campaign finance scheme.
Who else was, Jay?
I don't know. Becky,
it appears that all of the people who already pled guilty in this other case that were cooperating witnesses were party to what was taking place, because they were doing it through their names and talking. I mean, it was
his mom too? I heard you guys talking about this. It was openly
discussed in all of this, and the mother may have been involved, the father may have been involved. It's unclear.
And look, I'm not a scalps for scalp sake kind of person, but this goes to election integrity and all of the things that, gosh, they're in the news in so many ways these days. I do think it is something that the American people should see what happened here, see what's legal and illegal, and look, take the opportunity that people are paying attention to demonstrate what's permissible and not permissible. Right.
If you're him, though, I assume at this point you would plead guilty to it just because you wouldn't want to spend the money to fight it if you're going to be in prison for the rest of your life anyway, right?
Well, you're right. The dynamic, that's why I use the word resolution rather than trial. The dynamics around whether this is a case that results in a plea agreement and the like, or one where you have to actually put the facts on trial. I probably lean, for all the reasons you said, toward some type of settled resolution here.
What do you think is a fair sentence?
I'd like to see it pursued.
In terms of the view of that exchange and its leader?
The view has been that there may be a DOJ issue around Binance. They had to shut down their U.S. business. So there's absolutely been a trickle effect here, and it's hit Binance. They've had to close some of their accounts, and they really were a big part of this story. They were brought up consistently within the trial, and it's hit the credibility, especially of offshore accounts. I think it's helped Coinbase in a lot of ways, that's really the regulated onshore U.S. business, although they've got issues of their own with the SEC and they're facing their own legal battles. But I think anything offshore for a U.S. investor, people are going to be thinking twice about some of the disclosures, auditing, some of the finances, and it has absolutely hit that business as well. But it's really shocking to the extent to which investors are shaking this off and kind of shrugging this off. At Sequoia, big-time investors who were here and said, oh, kind of good riddance, that's taken care of. We're still investing in the space, and we're still optimistic and bullish. which is kind of fascinating. They're not seeing more of a moment of this reckoning and kind of thinking back. It seems like people want to move forward and kind of shove it under the rug and forget it ever happened.
That due diligence, don't worry about that.
Exactly.
Yeah, sure. But the question of what Bitcoin is for really hasn't been answered yet, other than speculation, right? So, it is having a rally right now. It is having a moment, not nearly to the highs where it was. But I think if you look at this idea that Kate was just hitting on, of the Silicon Valley investors here, the Wall Street titans and big prominent names who flew to the Bahamas to get right next to Sam Bankman-Fried, the politicians who took the donations from Sam Bankman-Fried, the celebrities who took enormous amounts of money for very little work, there really does need to be some soul searching in all of those camps right now as to why we did this and were we enabling this fraud just by our mere presence giving legitimacy and propping up this guy, and is that going to happen again? I think that's the big question. How do we stop that from happening again? And it won't stop unless there is some soul searching in all those places: Silicon Valley, Wall Street, Washington, Hollywood, wherever celebrities and sports executives live. All of that needs to be thought through.
Is he allowed to still tweet? No,
I don't think his lawyers
he's
are
lost
gonna let him
that
tweet.
privilege. Yeah.
That privilege is for that.
I was thinking back to a conversation I had with Sam Bankman-Fried when he was out on bail at one point before he got his bail revoked. He told me, and this was on background, it wasn't really reportable at the time, and we just didn't think it as newsworthy, but it was part of a conversation. We were trying to get him to do this on-camera interview, and he told me he would rather be in jail with a computer than out free in the world without internet access. So for someone like Sam Bankman-Fried, who lived his life online, the worst punishment you can think of is to not have internet access, truly.
Kate, Eamon, thank you guys. Wrapping up.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel. Support this great content by hitting the Cash App and by joining the Patreon.
And we have Elon Musk sending out a warning again. No more jobs, and that we're going to see something smarter than us. Now, I agree with the no more jobs, because you know I tell you that all the time. But there is absolutely nothing smarter than the person who's actually building the technology. And that's humanity. They want to sell you that something is smarter than you. Guys, they don't even understand the brain to this day. And they want you to believe that a computer, a machine, is going to be smarter than you. Now, it may come up with the result faster, but it will never be smarter than you. Its only thing it's doing is pulling the data that you actually put there. And we know all about Singularity Net. We have seen it in novels, we've seen it in movies. What do I always tell you? Your life is an illusion and TV is your reality. You're living a real life movie. And all you have to do is go watch Eagle Eye, and it's going to let you know what the future is going to look like. Now, we had Jay Clayton on the Bankman. Says that he needs more charges on the campaigning funds. And guys, we know there's not going to be any charge on that, because then you have to bring in the politicians. And if we start digging to see where their funds come from, you know all of them would be in jail. And remember, the Crypto Teacher told you. But after the Bankman FTX collapse, we're still seeing Bitcoin and crypto move right up. We know the big banks and big corporations funded crypto from the beginning. We had Bitcoin move up 5,000 just in a few days. And we know while the Bankman case was going on, Solana was going through the roof. And we had the CNBC reporter really say, we don't know what Bitcoin is going to be used for. And we know he's just playing the Hegelian dialectic for the sheep who don't know the fourth industrial revolution is right around the corner. And then they had a nerve to say the Bankman said he'd rather be in jail with a computer than in the world without. And guys, we know that's definitely not true. And we know right now the Bankman is not in jail. He's probably in one of those expensive detention homes. I would like someone to look that up, because I guarantee you he's not in a regular jail. And remember, the Crypto Teacher told you.
One of the things that I noticed in today's job number was the one number that was really strong was multiple job holders. Up over 200,000 to a record high. I think we're up to about 8.5 million Americans are now taking on more than one job. That's a contra-cyclical indicator. That's telling you that we are starting to see some stress at the margin. hit the household sector. So it hasn't hit the average, you're quite right. But remember, change is always at the margin. And you're starting to see some stresses. And that was actually the first number that I went to was was multiple job holders. Because I've noticed in the past 4 months, it's really started to hook higher. And that actually is a very good pre-recession indicator.
A lot of people say it's just normalizing. David, we will see. Thank you for joining us.
The recessions always start after the Fed is finished with this tightening cycle. The recessions don't usually occur while the Fed is still tightening. And so those are the lags. And actually, I think those of us that were wiping eggs off our face because we were calling for recession a tad too early, it reminds me a lot of what I was saying back in 2007. I was early to a fault. But, you know, the recession came in December of that year. I mean, to say recession is not going to come after the most pernicious tightening cycles since 1981, to me is a low odds bet. The reality, when you look at the historical record, is this. The recessions actually start 2 years after the Fed's first rate hike. And the Fed's first rate hike was March of 2022. So that puts a bullseye on this business cycle in the first quarter of next year. So, yeah, I would say that, you know, we're building up towards it. We've been in a soft landing. I don't think a soft landing is a permanent state of the economic cycle. The soft landing, which can last a year, and we've been in a soft landing, but the soft landing historically is just a bridge between the economic expansion phase and then the contraction phase, which I think will be next year's story. But, you know, the reality is that, you know, it's like back in 2007, you know, I'd be on your show and you'd be saying the same thing. Where's this recession you've been calling for? But, you know, back then, the Energizer Bunny, called the consumer, had its battery extended because of mortgage equity withdrawal and cash flow refinancing, the last vestige of the housing bubble. And that kept the consumer going until it didn't. And remember, the recession started in December 2007. And not even the Fed saw it. And really only me and Dick Berner on Wall Street actually were calling for recession back then. And this time around, you know, the lags have been extended because of the last vestige of the fiscal stimulus that was unveiled back in March of 2021. But the reality is that, as Powell keeps on saying, these things operate with lags. I was very encouraged today. I guess if you're saying, why would the stock market rally and the bond market rally? Well, I think that both markets just love the fact that the wage number at 0.2 and the 3-month trend is getting down towards 3% at an annual rate. And, you know, we got the unit labor cost number. Nobody talked about the productivity. Unit labor cost number in the third quarter, negative 0.8 sequential. So the big concern that we're going to have this wage price spiral with or without UAW strikes or other strikes, the wage numbers are actually decelerating very nicely. And I guess you could argue that's good news for both asset classes.
But couldn't you?
I would ask you the question that if you're right, that the consumer is in such great shape and we're going to have a terrific holiday shopping season and that the U.S. consumer is super strong, why was there no retail sector employment growth this past month? I mean, there was no growth in retail employment. So the retailers might be telling you something about what their outlook is. And when you look at that 4.9% GDP growth number, of course, all anybody ever talks about is the headline number. But you're right, it was skewed by the consumer. And the consumer, you know, ran down its savings rate to almost 3%. You know, the pre-COVID norm was more like 8 to 10%. We're down to 3%. So it was actually a very low quality consumer spending print and GDP print in that third quarter. In fact, there was almost no growth in GDP if the savings rate hadn't been drawn down as much as it has. So I'd say that, you know, when you're taking a look at, you know, why is it, Sarah, that delinquency rates are going up with a below 4% unemployment rate, and you've got delinquency rates going up in subprime autos, they're going up in credit cards. You're starting to see some strains. But I think that the economy is losing momentum, and I think that the people that threw away the recession call into the garbage bin because it didn't happen yet are going to be putting that call back on in the opening months of next year.
And guys, we finally get the truth, nothing but the truth on CNBC. We had David Rosenberg gives us all the facts on the economy. Says that a recession is definitely coming, that the consumer is in trouble. They are picking up extra jobs. Speaking about the $1 trillion in credit card debt, car delinquencies. And I was surprised on this conversation, but he told the truth, nothing but the truth. Yes, the reporter, of course, was playing the Hegelian dialectic, but he laid out the facts. Guys, the consumer is in trouble. We can look at the savings accounts. All you have to do is go to the Fed. They have every single data piece you want to let you know the consumer is hurting. But when it comes to them getting in the mainstream media, they tell you the consumer is great. And we can go to the restaurants, we can go to the stores and clearly see the consumers are being selective. And we know what the word consume means, to be eaten up. We know the consumer is going to keep going until they run out of gas. And we know the Fed knows that. Remember, they cause the problem, wait for the reaction, and run in with the solution. And everything is going to plan. Remember, they need that one crisis in order to bring in the machines. But they definitely need man to be on his knees before they can bring in this digital transformation. The robots, algorithms, and drones to take the economy over, and the sheep go inside the metaverse and get that free money airdrop. But little do the people know, they're going to be told what, where, and when and how to buy, and they have 3 to 6 months to spend it, or poof, it's gone. And when they go inside the metaverse, the genie is going to be out the bottle. And remember, the crypto teacher told you, because he knows. When it comes to the NWO, it's all planned out. You have a wonderful day.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in ETFs are active investors that are buying exposure.